Coming up, scammers exploit Pay ID, investors welcome a tentative deal to lift the US debt ceiling, and the latest market news. That's next. It is your daily 10-minute business and finance news wrap for this Monday, the 29th of May 2023. Later, the latest advice on how to avoid scams, particularly in online marketplaces. But first, to the Australian share market, which has started the week stronger. The S&P ASX 200 up 0.9% to 7,217. For more, I spoke with Elio D'Amato from Stockopedia. Elio, markets have had a good start to the week. Why and who led the gains?
Yeah, look, miners and financials are really driving the market today. Much of that driven by the fact that concerns had been emerging over the past few weeks of a possible economic slowdown created by the spate of recent central bank rate rises that we've seen across the world. Compounding this, of course, was the potential liquidity squeeze that could have been occurring on the back of those debt ceiling negotiations, and that really acted as a bit of an anchor for the broader market. So we've seen that lifted a little bit, and with today's news of a tentative deal between the White House and Republicans being made, our market's basically making up for lost ground because the US market's actually outperformed this for the last few weeks.
That tentative deal to raise the US debt ceiling, I mean, it's been welcomed by the market. Oil prices are up. The Nikkei is at its high since around 1990. We don't know how the US market or the UK market will react because the markets there will be closed tonight. But could it still have ongoing complications? Are we really out of the woods?
Well, look, unlikely, given this is the 79th debt ceiling raise we've seen since 1917. Look, talk is emerging that to fund the recent increase, the US government's going to have to issue some $1 trillion worth of Treasury bills in order to raise the money that it needs to keep the doors open. This could have flow-on effects like a glut in supply, basically too many bills, and that could lead to reduced prices. And then there might also be not enough liquidity to gobble it all up. So, look, I think that's only a moderate risk, to be quite frank and honest. I think global economies are awash with cash following the great COVID print job that we saw, and I think we'll be fine. So notwithstanding that, I suppose, the economic discussion around whether the merits around raising the debt ceiling to levels that are unlikely to ever be met is worthwhile. For now, the US continues to pay its bills, and I think the market will be more happy than sad with regards to that.
Okay, here we'll get an update on the inflation situation in Australia this week with a CPI monthly indicator released. How are investors positioned for the inflationary and interest rate environment at the moment?
Global economic markets have actually been easing, saying that the pace of inflation is starting to reduce, and I think the same expectation is for that to occur here. So we've seen some blessed relief with expectations expected to be on hold in June as we're starting to feel the pinch across the board with regards to a number of, indicators like listed retailers announcing that they've definitely seen a reduction in foot traffic coming through their stores. Also, elsewhere, other industries are tightening their belts. So I think a moderation in CPI, as many people expect, will provide confidence to the RBA that they can wait before having to take more action to see if their great recalibration instigated by the 11 rate rises is actually having the desired effect. The market, though, is still somewhat cautious because, of course, there's often a lagged impact. And if that lagged impact is quite significant, then we could see even further downgrades than what we've seen in some of those consumer-sensitive stocks.
On the markets today, one key stock, IDP Education, was probably the story of the day. The worst performer on the ASX 200, shares down by more than 10%. Why?
Yeah, look, early Saturday morning or Friday time, Canadian time, the authorities over there, basically the Immigration, Refugees and Citizenships Division, basically said that you are allowed to now have competitors in the student direct stream component of their student visas. Now, all of that basically means that well, how that affects IDP is that they produce the IELTS English proficiency test that's administered by IDP and the British Council, and the British Council, I should say. And it's been the only recognised English language proficiency test that the Canadians have been accepting up till date. So this basically means, well, for one, the companies come out and said they don't expect this increased competition to impact revenues and earnings, and they point to their global student placements as a continued driver for the company. Now, while this might be the case, investors have seen this in the past, particularly here in Australia, where we saw the introduction of competitors like Pearson's in Australia. That did have an impact on the company. But I think this is more sell the rumour by the fact, as operationally the company still continues to do well, and that placement side of the business is doing really strong. But obviously the introduction of new competition into something they used to have a monopoly over has made some investors quite nervous.
And finally, and very quickly, where do you see the opportunities for investors right now?
Yeah, building, construction and services remains highly attractive to us at the moment in response to an insatiable demand for their products and services. There's also a significant interest in stocks in the IT sector from a number of perspectives. One, the recent tech run in the US has seen them return to favour. Two, even those that aren't cash positive are basically merging at the moment. You've got to merge or die, particularly if you're not generating cash in this current climate. And three, there are still great businesses out there. So if you've avoided the sector for the terrible years, we urge investors to reconsider them now.
Earlier, D'Amato there from Stockopedia. Now to a story about scams. And NAB says customer reports of goods and services scams have increased by 66% in the past 3 months, with many criminals trying to exploit Pay ID. Raina Bosch spoke with NAB's investigations and fraud executive Chris Sheehan for more.
Overall, we've seen about a 38% increase in scams in the last 12 months of all types. Of these types of goods and services scams, of which the abuse of Pay ID forms one of those types, it's increased by about 66%. So it's definitely an area that we're concerned about and very concerned about. Why is it happening? Why are these scams happening? The reason that they are happening is because more people are using Pay ID, for example, as a way of paying for a good or service that they're purchasing. And scammers are always looking for an opportunity to take what is essentially a safe technology, a safe capability, and use it against people and steal their money. So unfortunately, the more people that use the payment system, the more that we're going to see scammers operating in that space.
Now, another key finding from out of this research was that around a third of these scams were actually conducted using Pay ID technology. Can you talk us through how that works?
Look, typically what we see with Pay ID, there's a couple of little hooks that the crooks will use, but typically what we'll see is that people will go to either sell something or purchase something using Pay ID, and they will be dealing with a scammer. They won't know it, but they'll be dealing with a scammer. And the scammer will tell them that in order for that payment to either be received or made, they need to have a fee attached to it. So they'll say something like, for this payment to go via Pay ID requires a business fee or a transaction fee, or I need to set up a Pay ID business account, which doesn't exist. And to do that, you need to help me by giving me the money to set that account up. So I think the key thing to remember here is that Pay ID is a payment service, a payment channel. It is free. It will never cost you money to use Pay ID. So if someone is asking you to pay a fee in order to use that service, they are lying to you and it's a scam.
Now, your research also noted the vulnerabilities associated with online marketplaces such as Facebook and Gumtree. What is it about these spaces that makes them more risky?
I think straight away they operate on a digital channel or in an online environment. So, and as all of your viewers and listeners would know, online environments facilitate anonymity and the ability for people to disguise their identity, or at least not disclose their true identity, and to operate often in another jurisdiction away from the person who is making the payment. So, like all online payments, they operate in that digital environment where people need to be very, very cautious of the risks that they may be taking and ensuring before they hit send on that payment, they are 100% sure of who that money is going to and that it's going to a legitimate person.
And finally, Chris, and perhaps most importantly, what is it that people can do to help identify and protect themselves from these types of scams?
Look, the number one thing that people can do is think before they hit send on a payment, be curious, ask questions, and be skeptical. If someone is asking you to pay a fee in exchange for using PayID, if someone sends you an email or a text message or a WhatsApp message saying that you need to pay a fee for you to be able to make a payment or receive a payment, that's a scam. PayID will never ask you to do that. Be skeptical and be curious about that before you hit send on a payment, because once you hit send on a payment, that money's gone, and our likelihood to be able to get it back for you is very, very low.
That is NAB's Chris Sheehan speaking with Raina Bosch. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.